Hi, and welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are a mixture of my journey and development towards financial freedom. They will cover financial products and they will also cover financial well-being so you, like me, can reach your financial goals sometime in the future. Now let's get into this latest video. Well, quite topical. The Bank of England have given more bad news to the UK public. Early today, they decided to increase interest rates from 1.25% up to 1.75%, an increase of 0.5%, the largest increase for over 27 years. And the Banking Committee, they voted 8-1 to increase rates by that percentage. Rates are at the highest level, what many investors have not seen for decades, and a lot of people have never experienced interest rates this high before. The Bank of England have taken dramatic steps to combat the possibility of rampant inflation. It was only a few weeks ago they were predicting inflation of 11%. As a result of today, they're now predicting inflation at the end of the year of close to 13%. So we can see how quickly steps have changed and the economic scenario has changed. It is forecast that they will reach the target of 2% within the next 2 years. But some have ultimately been said the Bank of England have been slow to react to recent events. They are blaming the crisis in Russia, they're blaming the pandemic in the past few months, and they're also blaming supply issues. But ultimately, it is down to the Bank of England to set interest rates and control monetary policy. Have a look at the quick chart, we can see what actions have been taken in the past few months. So firstly, back in December, rates were 0.1% and they've been increased slowly over the past few months, with increases in February, March, May, June, albeit 0.25% rises, and then ultimately today a 0.5% increase. Now the markets were expecting this news and it was already priced in. The markets think several months in advance. And the good news is, in a way, the bank have finally reacted to recent events. And the markets, one thing they do hate, they hate uncertainty. Unfortunately though, this action will have a detrimental effect on people who are already struggling financially, who are already maybe choosing between heating and eating. As we've seen in a recent price cap in April, fuel bills in the UK increased over £700, and it's now forecast fuel bills will be over £3,500 this autumn. Now there are steps in place from the UK government, a rebate of £400 each household spread over 6 months, roughly £67 a month of your fuel bills, but it won't make a great bit difference to the vast majority of households who are already struggling. Based on the actions taken today by the Bank of England, people should hopefully consider the following points to improve their financial situation, both in the short term and the long term. Now, most people's biggest outlay each month is their mortgage. If you're on a fixed rate mortgage, you will not be affected. But when that deal comes to an end, your rates will obviously be a lot higher. With regard to my current scenario, I've got 3 mortgages in place for properties. I am paying roughly around about 1.8%. When I come to next year, the rates will be higher. I've looked on my provider's website today, and the same deals are currently over 3%. It is believed 1.1 million people are on standard variable rate mortgages, and around 0.9 people are on tracker rates. Santander has already come out in the last few hours and announced that rates will be increased by 0.5% increase, so the full basis point rise today, with immediate effect from the 1st of September. So if you can try and fix your mortgage, get yourself in a better deal for the next 2 to 5 years, or even longer, depending on what your outlook is for interest rates moving forwards. So if you're on a fixed rate now, not a problem. but when that term ends, be prepared for much higher mortgage rates. Another thing you may consider is fixed rate savings. If you're already tied into a deal, you will not benefit from today's interest rate rises. Now, the bank may increase rates, but normally it's not by the full amount. And again, Santander in the same statement said they will increase rates by 0.25% only, so not the full interest rate rise. Simple example, their current account, the more interest rate will go from 0.75% to 1% with effect from next week. So one thing you may consider, do you have any savings in the emergency fund, and can you get a better rate? For years and years the banks have been paying awfully low, appalling bank rates of interest. They don't have to give you the full interest amount. By not doing so, it will increase their profits, it will increase their margins, it will increase their security against lending. So they don't have to pass on the full rates. But can you take advantage of better rates now providers are finally increasing their paltry saving rates? Another area you may look at may well be debt. If you've got debt in place, it will become more expensive to facilitate, and banks will no doubt be increasing their rates over the next few days. We are currently seeing mortgage or overdraft rates of over 30%, and credit card rates are on a similar amount. Do you have any debts? If so, can you review your existing debt? Or if you are considering taking on any new debt, that debt will obviously be more expensive to attain, and can you afford to pay those extra costs? Can you facilitate that debt with part of your monthly income and expenditure? Can you take advantage of any interest-free credit cards? Balance transfer, shall we say, interest-free credit for purchases. It may well depend upon your credit history. If you've got a good credit history, not a problem. If you've got a poor credit history, you may be stuck with the deals you've got. You cannot get credit elsewhere on a cheaper basis. So do you take them actions to reduce your current debt? It may well be you make some overpayments and reduce debts. Okay, whether you do the snowball method or the avalanche method, may be a priority. You reduce any existing you have, because it will obviously become more expensive over the next few weeks and months. And one final point of note maybe consider is make your money work for you. Although savings are being increased by small amounts, you are probably receiving low interest rates. You are lucky if you're getting between 1 and 2% in a bank or building society, and inflation is running at nearly 10%. It is expected, as I said, to increase to 13% this year. So in fact, if you've got money in a bank or building society, you are actually losing money, and it will lose its powering power over the next few months and years. Get into the habit of investing. Although the markets have struggled this year due to global events such as the Russian conflict, impending recession, global supplies, and maybe the tech companies in America have had poor results, okay, the markets hate sentiment, shall we say. They hate uncertainty. But the markets normally give an annual return of 8% since records began. So can you see this as a period of a great time to reset your finances? Can you take advantage of the current economic situation to hopefully improve your financial position? Now, right at the start of the video, we said about the Bank of England giving out bad news. I've seen a very, shall we say, interesting headline last week. It stated that a quarter of all the people in the UK have no savings at all. They are living paycheck to paycheck, which is frightening, quite frankly, shall we say, frightening. Are you struggling to make ends meet? And are you in a very unfortunate financial position, which will only get worse as a result of today's actions? Now, there will be people that will prosper. There will be people who take advantage, okay? Unfortunately, bad news sells. So when you look at the news the next few days, it will be about an impending recession. It will be about interest rates being increased, increased mortgage costs, etc. People are struggling. It will only exacerbate the conditions. But take this as an opportunity, as what we said, the Great Reset. Okay, get your finances in place, remortgage, get your debt sorted, shall we say. Can you take advantage of increased savings rates? And hopefully, by taking these actions, you will be in a much better financial position, whether that's 6 months, 12 months, or 5, 10 years down the road. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.